So in today's video, we're going to be doing some analysis on Bitcoin mining companies, a way to get exposure to the cryptocurrency industry via traditional methods, which means that if you're from the UK, you can invest in these Bitcoin mining stocks within your stocks and shares ISA, and that means that all of the gains you make will be tax-free. So in this video, we're going to be taking a look at some potential buy areas and price targets of some of the top Bitcoin mining companies that we may well see over the coming months. So let's get into it. So let's start by talking about the reasons why people would want to invest in Bitcoin mining stocks as opposed to or alongside investing in cryptocurrency itself. Well, one of the main reasons is that trust and security. Some people would just prefer to have their investments in a traditional broker as opposed to putting their money into cryptocurrency itself, where of course the whole point is that you are your own bank and you're in charge of keeping your assets safe. Second of all is, as we mentioned before, the tax-free benefits of having these investments in a stocks and shares ISA, again, if you're from the UK. And lastly, there is the opportunity to actually outperform the market in terms of the stocks and share price competing against the Bitcoin price, which we have already seen so far in the last 2 years. If we just take a look at the chart, Bitcoin from the bear market lows of $15,000 back in November, December 2022 has done an impressive 500% gain up to today's price of $92,000. If we go through the list of Bitcoin mining companies we're going to cover today, you can see that some have actually outperformed or done just as well as Bitcoin itself. I have to move some of these up because price has moved a little bit since I started the video, but Marathon has done 470%, so just shy of Bitcoin itself. CleanSpark has done better than Bitcoin with 600%. Iron has done an incredible 750%. Riot 262%, so that one has actually obviously underperformed against Bitcoin. Cause hasn't been out that long, unfortunately. It came out this beginning of this year, but you can see a 450% return just in this year alone, so that has obviously massively outperformed Bitcoin. That's only done a 100% move this year. TeraWulf, an incredible just shy of 1,100% return. Hut 8 Mining, 480% return, so just slightly off the pace of Bitcoin, but more or less keeping up with it. And then Cypher, again, another incredible 1,000 or just shy of 1,100% returns. So you can see that the majority of these Bitcoin mining stocks have actually outperformed Bitcoin over the last 2 years, or certainly in the past 12 months. And I've only covered 8 of what is currently, if we just take a look at the list, 24 different Bitcoin mining companies. So you can get this list from companiesmarketcap.com. Now, if you are going to invest in these Bitcoin mining stocks, again, not financial advice, but definitely look at probably the top 10 to 15. The lower that you go in terms of market cap, obviously the riskier the investment, and also diversify across several different miners. Don't go all in on one Bitcoin mining company because of course anything can happen. Any company can go under. So as with any investment, do your own research and diversify across several different miners. That way it reduces your risk of capital loss. Now, in terms of doing your own research, one of the best tools you can have in trading and investing is a supportive online community. And that's exactly what we provide at Learning Crypto. So this is our Discord, open to our premium members. So we've got lots of chats, investing chats, trading chats, all that sort of good stuff. This is our investing chat. We talk about Bitcoin mining companies all the time, particularly on our Friday morning live streams, which members can join as well. Also, if you're into trading, we've got analysts which provide trades. You can see this is the trade success room. Lots of trades coming in daily. So if you want to check that out, go to our website, learningcrypto.co.uk. We currently have a Black Friday sale, 70% off of the annual Traders Lounge, 50% off of the premium membership. If you don't want to commit to an annual, our monthlies are nice and cheap as well. £10 a month for premium, £20 a month for the Traders Lounge, which includes everything with premium, plus all the trading stuff, including our traders live streams, one which we have tonight every Monday night. And if you don't fancy committing to anything, we do have our free Discord as well, so you can jump in there, have a chat and see what you like. So hopefully we'll see you in there. So finally, just before we get into the charts and talk about some potential buy areas and price targets, I have talked about it in previous videos, but I'm just going to quickly go over the Trading 212 stocks and shares ISA, which I believe is the best on the market. Not only their stocks and shares ISA, but their cash ISA as well, for the following reasons. If we go down and take a look and compare Trading 212 to other stocks and shares ISA providers, so you can see here there's no commission fees, unlike the likes of Hargreaves and Lansdowne, who actually charge anywhere between £6 and £12 per trade or per buy of a stocks and share or sell. International investor, again, £4 per trade. You can imagine those fees are going to mount up over time. There are no account fees, as you can see here. Some providers actually charge you a percentage of your account value. You don't get any of that with Trading 212, and everything else, dividend reinvestments. You can have fractional shares. So if you're buying a share of a big company and you can't afford a whole share, you can buy a half share, quarter share, anything like that. Free bank deposits, free withdrawals. Absolutely fantastic. No hidden charges. Your money's fully protected by the FSCS protection of up to £85,000. So your money is nice and safe. But not only that, you get to earn 5.17% annual interest on your cash, which gets paid daily. So that can compound quite quickly over time. And that's not only in the cash ISA, but also in the stocks and shares ISA. So you can have money deposited in your stocks and shares ISA, not actually invested in any stocks, but still earning interest at 5.17% AER, which is fantastic. And not only that, but you can seamlessly move money in between your different Trading 212 accounts, from the two ISA accounts, the stocks and shares ISA, into the cash ISA, and then into the general investment account as well, and withdraw. And the best thing about it is, now that they've changed the rules on the ISA deposits, it's now different. It's still £20,000 per tax year. However, it's now on your net deposit. So before, if you invested, say, £10,000 into your stocks and shares ISA and then withdrew £5,000 for something, you would then only be able to put in another £10,000, because that would take you to your total £20,000 limit. However, now it's just based on net deposits. Again, if you put that £10,000 in, withdrew £5,000, you would then be able to put back in £15,000, because it would not count the £5,000 that you've taken back out. So now you can actually seamlessly move money in and out of your ISA without having to worry about using up that allocation that you get every year. So as I say, Trading 212, really nice, easy user interface. You can use it on phone or on desktop, and I think it's the best provider on the market. So let's get into the charts then, and we're going to be doing some very simple technical analysis on the higher time frames to identify some potential buy areas and then some sell areas or take profit areas that we could see in the coming months. Now, my personal approach to investing in the stocks and shares, particularly the Bitcoin mining companies, is a dollar cost average approach, where I simply buy a certain amount either every day or every week, regardless of the price, and then I have bigger buy orders in these higher time frame areas of support, which I'm going to show you in this video. The reason being that, as we've seen, they are very volatile, and with Bitcoin being in the price range it is now, beyond all-time highs and potentially going to 100k and beyond, you don't know whether you're actually going to get those retests of support areas, which we're going to go over. So my personal opinion, and not financial advice, but I would be looking at dollar cost averaging anywhere between now and all the way down to the potential support levels that we're going to go over in this video, because there is every chance that we may not hit them and you're going to miss the boat, particularly if you're not already invested in them. So let's take a look, starting with Marathon Digital. Now, we're actually on a really nice level of support already with Marathon Digital at around that nice round number of $20. You can see big area of previous support and resistance where things have stopped and turned around in the past, and a potential target is up to this $31 region where we were last at in February of this year. So a return from today's prices up to there is still a decent 57%. The next target, if we could break above $32 for me, would be up here at $52, which we were in the last cycle back in 2021. And again, from today's prices, you're looking at a 158% return, which is fantastic when you consider the traditional stock market returns. Worst case scenario, if we were to lose this weekly level of support, we may well come down and retest $13.70, or about $13-14. However, I think it's pretty unlikely. I'm pretty sure this weekly level of support will hold, but always have some dry powder just in case we do go lower. Clean Spark in a bit of a tricky spot here. You can see we've got this nice weekly range formed with the weekly range high up at $22, the weekly range low down here at about $8, and we've actually rejected the weekly mid-range last week at $15. So you can see this was a massive level of support all the way through February until it finally got lost in July. So it's going to be a pretty big level of resistance. So you've got two options here. You can either start dollar cost averaging in before we break it. So maybe we come down, retest this weekly moving average 21. Maybe we come all the way back down to the weekly range lows, which would be a 50% drop from here. Again, I think that's pretty unlikely. Or you can wait until we get a weekly candle close back above $15, $16 and then play the move from the weekly mid-range up to the range high, which would be about 45%. If you started dollar cost averaging in from here and we went straight up to the weekly range high, again, that's going to be a return of about 58%. And then beyond that, you'd be hoping for a return to all-time highs of $40. Now, not all of these stocks are going to return to all-time highs due to the fact that there's been a lot of stock splitting and things like that. So some stocks is going to be impossible to get back to all-time highs, but something like Clean Spark, I think, could easily do it, and you would be looking at around a 200% move from today's prices, from $14 up to $42. Of course, not a guarantee, but in terms of a risk reward, looks very good indeed. In terms of Iron or Iris Energy, again, a bit of a tricky spot. We've had a nice impulsive move off of this level support here at $8.50. Now, you could wait to see if we come back down and retest again, but I think that's risky. I would rather start dollar cost averaging in now, and then if it does go lower, then happy days, you get some cheaper, because if we start running from here, you're gonna miss the boat. We are above the weekly moving average 21, so it's trending really nicely. So if you were to get in here and we were to return to that weekly level of resistance up at $16 where we were back in July, that's still a 50% return. And then going back to the original listing price, which was back in November of 2021, that is about $28, and that would be about 166% return. Now, if we were to get back up there, who knows how far it goes, because of course, as I say, it's never actually seen a bull market. So Iron could be a very good pick indeed, and as I say, not a terrible buy area here at around $10.60. Dollar cost average down to $8.70, and I think you could do very well. Right, platforms. Let's zoom in here. So again, we've got a nice higher time frame range that's been carved out. So we've got a weekly range high up here at about $18, weekly range low down here at about $9. And again, similar to I think it was a Clean Spark, we rejected the weekly mid-range here at about $13, $14. So again, you can either start dollar cost averaging from here down to the weekly range low of $9.50, or you can wait for the weekly candle close back above the weekly mid-range of $14 and then get in there. The only trouble is you do risk the fact that, like we saw back here in July, massive candle which closed at about $15, so you missed out on all of the price in between the bottom of the candle and the top of it. So if you start dollar cost averaging from here and we went to the weekly range high, you'd be looking at a return of around 45%, which is nice. If we do break out of the range, the next big level of resistance on the charts here is at about $27. So from today's prices up to there, you're looking at about 120% return, which again, very nice return in terms of, you know, traditional stock market returns. Going on to cores then, there's obviously not a lot to go over on the weekly time frame. It's very new and it has just been in up only mode. If you go down to the daily though, there are a couple of nice pullback areas you could potentially get in on. So this daily level here, which was previous resistance and in and around the daily moving average 21, around $14.60 to $14.30. And then if it drops lower, you've got another nice level of support here, which was the bottom back before the election or on the election, around about $13 to $12.50. But again, if I were you, me personally, dollar cost averaging in, because who knows how high this keeps going, and you may not well get a dip. The best one we got was back in August. This very just one candle down and then straight back up again. So yeah, the momentum is very much with the bulls. In terms of Wolf, again, weekly time frame, if we take a look, we've had a really nice bounce or breakout of this weekly level of resistance here at around $6. Again, we've already had a retest of it as support, so I think it's unlikely that we come back down and retest it again, but of course we could. So again, I think the best policy is start dollar cost averaging here. We've had a nice pullback from last week, as you can see. So dollar cost averaging between here and this weekly level support. The next target for me is this weekly resistance up here at around $13. If we just take a look at that, so from here up to that level, you're looking at a 75% return, and then potentially a return to all-time highs at around $40-50, which would of course be a huge move of 500%. Whether it gets up there or not, we'll have to wait and see. But if it can break that weekly level resistance at $13, there's every possibility that it could. So as I say, anywhere between here and $6 looks like a good buy in my opinion. Hut 8, again, nice break of this big level of resistance here at $20. You can see this has been a big level of support and resistance in the past. This is the first time we've been above $20 since July of 2023. So again, dollar cost averaging in between here and this weekly level $20, I think is a good play, riding it up to the next big level of resistance, which is $45. So from here, you're looking at about an 80% return. And if it could break $45, then a return to all-time highs would be a massive 224%. But again, no guarantees it gets there. I think there is a good chance that we do see $45 in this cycle, which again would be an 80% return from here. And then finally, Cypher. Weekly time frame, again, big level of weekly resistance that we broke 2 weeks ago. We've come back down and tested as support. We're basically sat on that support level now, so decent entry here. You're in validation. If we get a weekly counter close back below $6.20ish, then you can just cut your losses. So nice risk reward in my opinion. Up to this next level of previous support and resistance, you can see it's been a big level in the past. That is a 42% return from here up to that level, and then a return to all-time highs from today's prices is about 125%. So you can see that all of these miners obviously have had a very good couple of weeks since the election. They've pulled back a lot from last week. So even though things are higher than they've been in the last few months, they're still lower than they were, or most of them are lower than they were in the summer, and they're lower than they were last week. So you are getting in on a bit of a discount, and the upper targets are very good in terms of their risk and reward. And let's not forget, as we've explained at the beginning of the video, if you invest in these Bitcoin mining stocks within your stocks and shares ISA, any gains you make are going to be tax-free. So let's know in the comments below what Bitcoin mining stocks you're invested in, which ones are you most bullish on, and what is your targets for them. So hope you enjoyed the video. Like and subscribe if you did, and I'll see you in the next one.